To me, IBM is a dead stock. However, it was one of the first to get into the AI space with its Watson that eventually beat the world chess master back in the days. This is the monthly chart, and you can see for the better half of 8, 9 years, price has just been range bound. Let's draw the football field. This is one part of the end zone, and then you have the other part of the end zone, and in the middle is the 50-yard line, which is where sellers and buyers are balanced. Again, the extremes right now up at the 170, you have an imbalance between sellers and buyers, and down at the 101 level, you have an imbalance between buyers and sellers. All right, before we continue with the analysis, let's look at this article. It is coming from Market Beat. 3 reasons the sleeping giant is about to wake up, potentially. So IBM, or Big Blue as it's known on Wall Street, is the tech giant that people love to hate, despite holding one of the longest track records of all currently publicly traded tech companies out there, having IPO before the moon landing. Its shares have built up a nasty reputation for trading sideways, which we just saw. IBM stock is currently trading at 2015 levels, having traded in a tight range over the intervening years, which we just saw, right? Leaving aside the company's not so great share price habits across the years, there are signs that a new IBM is starting to emerge. The team over at JP Morgan was one of the first who cottoned onto this over the summer. With the analysts call the company's continued transformation was continuing to pick up steam, while the emergence of AI as a new and red-hot industry was providing a welcome tailwind. It's still fairly recent that IBM completed the spin-off of its managed infrastructure services business, Kyndryl, and since then there's been a seismic shift in its revenue profile. This week saw a fresh upgrade from RBC Capital, who on Wednesday initiated their coverage on IBM stock to an outperform rating. Analyst Matthew Swanson and his team are impressed with what they call the strength of IBM's software platform. Another thing to like about IBM is that it still feels like you're getting a good deal right now. Jim Cramer pointed out on CNBC this week, saying IBM is very inexpensive, so you can bet it's off to the races. In many ways, they have been since before summer. I don't know. That sounds like a shorting opportunity if Jim Cramer is saying to buy. Investors getting involved will also benefit from one of the best dividend yields out there when it comes to big tech. 4.5% is nothing to shy away from, especially when shares are ticking up as consistently as IBM in recent months. Alright, so again, we looked at the monthly chart, and this is one part of the end zone. This is another part of the end zone. And if we go to the weekly chart, we can see that the current leg is up, meaning momentum is to the upside. You can see that also if I draw a trend line. However, it appears potentially that trend line is about to be breached if price closes below with 3.5 trading days left in the week. Again, in the middle, you have an imbalance between buyers and sellers. The extremes is where you want to get long. Down here you can see you had a drop in price, 2 basic candles in a rally. So this was a potential area to go long, as that was where you had some weekly buyers. And if I look up into the right, I see these rejection wicks. There has to be something to the left. So rally, base, and then the drop in price. So if I just draw a line here, as you can see, so rally, base, drop, right? Price came into the area back in December and then dropped roughly $35. And then it was a buy, and now it appears that it's a short again. Confirmation is going to be a close below, again, this short-term uptrend on the weekly chart. So again, best to play the extremes. When you dabble in the middle, be prepared to be chopped up. Thanks for watching. Subscribe. Please like the video.